G'day everyone, welcome back to Pete's Investing. Today's April 20, 2023. This is the US S&P 500 market update. On the we've actually broken up through the CCI 1500 moving average, which is our key indicator, through the moving average of the 400, but ever so slightly. But on the 4 hour and the hourly, you can see there we're in upswings, so just be aware of that. Let's drill down on each of these. So on the daily first, again, we've broken up through the moving average, which is a positive. And I've also broken up through this diagonal descending trend line, which is another slight positive. Now, the next level which we'll look out for is we want to see this moving average turn green on the CCI, but we also want to see the price break above this resistance, that resistance at 41.93. And I've also got this support area down here at 38.31. So if it does those and that moves to the green and it breaks above that, and it's a very bullish signal, and we're going to go very bullish on the US market. A couple of things to be mindful of. I do use the CCI 1500 moving average as a key indicator of price movement, as opposed to the moving average 200. You can see here, for example, the CCI broke to the downside here in September 21, whereas the price was still above the moving average here on the price chart. So that, yeah, you could have had a few more up movements on that little range there, but this was telling you that the price was weakening, and eventually it did, and it started falling off. And yes, again, you would have had nice little price movements in these little retracements, but again, that would have been against the major trend. So just be aware of that as you're trading this using the CCI. So looking at the 4 hour chart, there's also this diagonal ascending trend line, which we track, and it's been bouncing off that a number of times. It started then bouncing down and along this descending daily trend line, which we drew on the daily chart, and now it's moving away from that again, and it looks like it's probably going to gravitate back to this separate ascending trend line again towards the resistance. So it loves their trend lines, so just always respect those. But notice the CCI is pretty strong, bullish movement on the 4 hour chart as well. On the hour chart, let me just get rid of these fractals for a moment, make it clearer. You can see first off the CCI is still moving in an upward momentum, so that's a positive. Although just be mindful, I have drawn this very minor divergence. The CCI these tops on the CCI is moving to the downside, and that's almost still continuing if I extended that, whereas the price chart is moving more, higher highs are happening here. Now these divergences don't always play out, but when they do, they play out nicely. So we actually may see it. This may coincide with this resistance area. This may coincide with that. Might go a bit higher. This may keep moving more to the downside, in which case we'll see it break to the downside most likely. So just be aware of that if you are trading the US market long, even though the CCI on the hourly is long. Just be aware of that divergence. So to understand how to properly trade using the average down. Oh, before I go there, sorry about that. Let me just show you a quick trading idea. If you are in an area where you're going long, such as in this area here, for example, I use fractals. So, for example, when the fractal breaks, when the candle breaks above the fractal, like it did in that area there, I get out with a small percentage gain in that area there. You can use percentage gains or monetary gains that you're happy with, or even a moving average change of direction, whatever suits your style. I like using percentage gains. So you could have traded a long position there. That broke out of the fractal. Don't enter trades when they're already broken out of the fractal. Make sure it's on the bar that's just exited the fractal. Again, you probably would have entered another long trade there, little gain, another long trade there, little gain, another long. You probably would have entered twice there, another long trade there, little gain, long trade, and so on. Now, in cases where you get caught out at the very top, you might be in a position holding one position or one contract of the instrument. Reference the average down approach, which I use often. I don't use stop losses. You can reference that in the links below. Support us more on Patreon. Thanks for watching, and see you in a future video.